Welcome back. The madness continues and our housing market is not sustainable to say the least because Redfin just announced on Thursday that home sold prices are higher today compared to the same time frame just 12 months ago. This is despite the fact that average mortgage rates have been at or above 6% all year. Let me repeat this. The median sold price is now higher compared to just 12 months ago. This report covers the 4 weeks ended July 9th from Redfin here. And let me just share this with you guys right now because the median sold price is just under $384,000. That's up by 1.5% from 1 year ago. This is the first time the home sold prices are higher this year compared to last year since February this year. On top of that, we're only $2,500 away from reaching a new all-time record high that was set back in June of 2022. Just absolutely insane. I would never think that I'd be reporting nearly record high home prices nationwide, especially given the fact that rates have been increasing so much this year. And of course, are so much higher compared to previous years, right? So here's a look at the median sold price in the US. Of course, the blue line is 2023. The black line is last year. So right now, a gain of 1% from last year at $384,000. 1 year ago at this time, the median sold price was $385,000. But at $384,000, this is very, very close. Again, only $2,500 away from all-time record highs that was set last June when the median sold price was $386,000. So this is the first time that prices are up from 12 months ago since February this year. Now, this is exactly what I was telling you guys what's going to happen because home prices are increasing big time ever since February this year. But I would imagine it's kind of going to go like this. After sometime in July, home prices should start decreasing, which is normal during a normal housing market. We tend to see a decrease in home prices in the second half of the year. So I would imagine that, this is just a guess. I'm not a real estate market fortune teller, but let me know what you guys think about this because last year this time, average rates were increasing greatly, right? The end of 2021, rates were at around 3.3%. But by the time we hit in July, rates were actually just under 6%. So they more than doubled in less than 12 months. Whereas this year, rates have been kind of in the range of 6 to around 7.2%, but they're not skyrocketing like last year. So because rates were skyrocketing last year, that actually shocked the housing market. That's why home prices fell greatly, especially in the late summer months through the fall months. But this year, again, we're not seeing rates surge like it did last year. So I would imagine if rates stay around 7% and don't spike above that, I would imagine that home prices will fall, but not the same rate we saw last year. So just to take a guess here, again, I am not a real estate market fortune teller. I do not have any superpowers. And of course, a lot could change in the next 6 months. But I would imagine we're probably going to end up around right here, a gain in the range of 1 to 5% year over year regarding the median sold price nationwide. In my personal opinion, this is really going to vary on unemployment rates, inventory levels, as well as the number of houses that get listed for sale, which is a big, big problem in the US, which I've been talking about for quite some time here. And I'll share some data regarding that here in a little bit. But I just want to throw this out here because this gain of 1.5% is definitely not sustainable, but not a big surprise. I was expecting that. Anyways, let's go on and talk about the areas in which home prices have increased the most. I actually haven't even read the report here, but I saw this. I want to make a video for you guys right away. So home prices increased the most in Milwaukee, a gain of 13.5%. And that was followed by Providence, Rhode Island, a gain of 9.2%. Miami, Florida saw a gain of 7.8%. And Cincinnati, Ohio increased by 6.7%. And that was followed by Newark, New Jersey, also an increase of 6.7%. So there's only one metro out of the 50 biggest metros they track here that increased by more than 10%. That was Milwaukee, Wisconsin, a gain of 13.5%. In contrast, home sold prices decreased year over year in 19 of the 50 most populous metros. Austin, Texas led the nation once again, a decrease of 9%. That was followed by Detroit, Las Vegas, Phoenix, and Fort Worth, Texas. And again, if I had to guess, this number right here, 19 metros down year over year, is likely to decrease in the months ahead, given the fact that I would expect nationwide that home prices will be positive in many metros across the United States, which is vastly different compared to last year when that number was increasing greatly, given the fact that home prices were decreasing greatly as well. But I would imagine this number here, 19 metros, will probably decrease in the months ahead. And of course, I'll definitely keep you posted regarding that, of course. Again, leave me a comment below with your thoughts regarding this. I'm just being realistic here because this lack of housing inventory is becoming a big issue, which is really the main reason why home prices are increasing, not due to a giant surge in demand like we saw in the first half last year. Now, here's another metric that is not sustainable. Here's the monthly mortgage payment on the median asking price home. This is the average monthly housing payment based on the average price home in the United States, more or less. $2,627 is the average payment there at the current, keyword there, current, 6.81% rate. That, however, is based on the weekly rate from Freddie Mac as of July 6th, though. This is on par with the all-time record high that was set 1 week ago and up by 13% year over year. So in other words, in order to buy an average price home today compared to 12 months ago, it's going to cost you about $305 more per month compared to 12 months ago. To give you guys an update regarding average rates, which of course is much higher than 6.81%, when looking at weekly rates, according to Freddie Mac, they actually just announced this on today, which is the 13th of July here. They state here for their weekly survey that average 30-year fix for people with great credit is at 6.96%, not 6.81%. So I imagine that in next week's report, given the fact that home prices are still increasing, and of course, average rates increase greatly as well, next week when they announce their weekly housing market update, it will likely be a new all-time record high for average monthly housing payments. So according to Freddie Mac here, it says average mortgage rates increased to their highest level since November 2022, the last time rates broke 7% on a weekly basis. But also today, which again is the 13th, the 10-year Treasury note, or the yield on the 10-year Treasury note, has decreased once again, down by 9 basis points. Yesterday, it decreased by about 10 basis points as well. Now we're down to 3.767%. So according to Investopedia.com, let me just refresh this. Average rate today with people with exceptional credit is at 7.30%. Just 2 days ago, I believe they're reporting average rates at 7.6%. So a decrease of about 30 basis points in 2 days. Also, according to the Mortgage News Daily, for people with exceptional credit, rates yesterday were at 6.96%. They actually have not announced today's rates at the time of filming this video. However, though, with the beauty of video editing, I'll put the number right up right here. That's the average rate today, which I had to guess. I would imagine it's going to be around 6.85%. So we'll see if I'm right regarding that. But yesterday it was at 6.96%. 1 year ago, average rates for 30-year fix was at 5.71%. And getting back to Redfin's report here, because home prices and rates have been increasing, of course, your average monthly housing payment, like I mentioned, has been rising as well, a gain of nearly 13%. So your average payment is around $2,600. 1 year ago, it was around $2,300. But back in 2020, for example, average monthly housing payments was just under $1,500. This means to buy an average priced home today compared to 3 years ago, it's going to cost you around $1,100 more per month to buy that same average price home today. And that's a giant increase of 78% since July of 2020. I also want to give you guys an update regarding pending home sales, new listings, as well as housing inventory from Redfin here, because pending home sales decreased by 14.8% year over year, continuing a year-long plus streak of double-digit decreases. So the number of offers accepted between buyers and sellers has been decreasing by double digits for more than 1 year. So a lack of housing demand as evidenced by this lack of contracts being signed. So pending home sales fell in all but one of the 50 most populous metros. So they actually increased by 4.6% in Austin, Texas, but they fell the most in Cleveland, Ohio, down by nearly 35%. Newark, New Jersey fell by 25%. Warren, Michigan fell by 24%. Milwaukee, Wisconsin saw a decrease of 23%. And Cincinnati, Ohio fell by 22.5% in the number of pending home sales compared to a year ago. Regarding new listings fell a whopping 26.8% year over year, the biggest decrease since May of 2020. Back in May 2020 was obviously the onset of COVID, when a lot of people decided to take their houses off the market and obviously decided not to list their houses because of the introduction of COVID. So it's absolutely mind-boggling. We have the biggest reduction in new listings since the onset of COVID here. And in fact, new listings decreased in each of the 50 most populous metros as well. They fell the most in Las Vegas, down by 49%. Phoenix, Arizona, down by about 42%. That was followed by Cleveland, Ohio, Providence, Rhode Island, and Newark, New Jersey. Let's first have a look at the number of pending home sales. Right now, again, down by 14.8%, slightly worse than last week at 14.4%. So there's approximately 83,000 pending home sales for the 4 weeks ended July 9th. 1 year ago, there was around 98,000. 2 years ago, there was around 120,000. Now there's only 83,000. In regards to new listings, take a look at this. Giant decrease of 26.8%, the biggest decrease since May of 2020. Only around 85,000 new listings over the previous month. Compare this to 2021 as well as 2022. Last year, there's 115,000 new listings, just under 116,000. This means this year we've had 31,000 fewer new listings compared to 2021 and 2022 at this time, which is one reason why we're seeing a lack of housing inventory. So speaking of that, let me share that right with you guys right here. This is active listings from Redfin, which, by the way, this website right here is Redfin's data center. It's a public website. If you guys want to look at what's happening on a national level and follow me along in today's video. And of course, you can click on this right here and look at a bunch of metros that they actually follow as well. But on a national level, I want to share this with you guys right here. New listings, or actually active listings, I should say, the number of houses for sale decreased by 14% year over year. There's approximately 762,000 homes for sale, according to Redfin. 1 year ago, there was 890,000. This means there's approximately 128 fewer houses for sale right now compared to 2022 at this time. And this, my friends, is one of the main reasons why home prices have been increasing ever since February this year, and they're still higher today compared to 2022. Okay, let's change gears slightly here and talk about the month supply, because on a national level, over the previous 4 weeks, the month supply was at 2.8 months, higher than last year at this time, when the month supply was also around 2.5 months, or around 2.5 months. So right now we're slightly higher than last year's levels, and also higher compared to 2021, when the month supply was around 2 months. Also, houses overall are still selling fairly quickly as well. So out of all the pending home sales over the previous month, 30% of those accepted an offer within the first 2 weeks of the house being listed for sale. So houses on average selling very quickly, 30% of the time, I should say. So that's actually on par with last year's levels as well, when the percentage there was also around 30% as well. Also, in regards to how fast or how slow houses are selling nationally, days in the market, or the median days in the market, is at 27 days. Back in 2022 and 2021 at this time, days in the market was around 20 days. So this means it's taking about 7 days longer to sell a house compared to the past couple of years. But compared to 2020 though, houses on average are still selling faster. In 2020 at this time, days in the market was around 43 days. Now it's at 27 days. And lastly, let's have a look at the average sale price to final list price ratio. This is the ratio between the asking price when a house gets listed for sale and the final sale price as well. A friendly reminder though, this is a lagging indicator because this is based on closed home sales. Therefore, this is really a measure of what our housing market was like 1 to 2 months ago when the home seller accepted the offer from the home buyer. So on average, over the previous 1 month, houses on average sold for the seller's final asking price. 1 year ago this time, houses on average sold for 1.5% over the asking price, but this is actually below the peak, which was set back in May last year, when houses on average sold for about 2.5% over the seller's asking price, whereas right now they're selling for the asking price on average. And with that said, please comment below with your biggest takeaways from today's video. Also, if you guys got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Of course, I appreciate you. Hope you guys have an awesome day and I look forward to seeing you on the next video.